All right, today we're cracking open a document that, honestly, most big companies have to publish, but very few of us ever actually read. But trust me, hidden inside, there's a really fascinating story.
So, what if a company had to publish its secret diary? Like a real diary where every 3 months they have to legally tell everyone how they're doing, the big choices they made, and even what they're worried about for the future.
Well, that diary actually exists, and it's called a 10Q. You can think of it as a company's official report card. And today, we're going to use it to investigate what's really happening inside one of the biggest food companies on the planet.
Okay, so our case study today is General Mills. Yep, the company behind brands you definitely know, like Cheerios and Blue Buffalo Pet Food. And we're diving into their report from early 2026.
All right, first up, let's take a look at the big, flashy numbers. Kind of like a quick health checkup for the company this quarter.
And whoa, right off the bat, things look a little challenging. Net sales, which is basically all the money coming in the door, were down 8% compared to the same time last year.
And then you look at operating profit. You know, what's left after they pay all the bills to keep the lights on, and that took an even bigger hit. We're talking a 41% drop.
And this is a big one for investors. Earnings per share. It was basically cut in half, down 50%. Ouch.
So at a glance, you'd think, wow, this was a really tough quarter. But here's the thing. Those numbers don't tell the whole story. The real story is in the why.
And it turns out, when you start digging, you see that General Mills made some absolutely massive strategic moves that dramatically impacted those headline figures. This wasn't just a bad quarter, it was a pivot.
So here's what's really interesting. Look at this clear strategic shift. They sold their entire U.S. yogurt business. Gone. And at the same time, they made a huge investment in high-end pet food. They're basically swapping yogurt for kibble.
And just to give you an idea of the scale here, that sale of the yogurt division, it brought in a pre-tax gain of over $1 billion. So yeah, that one deal alone is going to make the quarterly results look pretty wild.
And you don't even have to guess because the report itself tells us what they're doing. They say this is a deliberate strategy. They want to simplify, focus on their main North American business, and double down on the pet food market, which is growing like crazy.
And here's the thing, a massive company like General Mills isn't just one single business, right? It's really a collection of different parts, and believe me, they are not all performing the same way. So if you break it down, the company is really split into these four main divisions. And as you can see, North America Retail, their classic grocery business, is by far the biggest piece of the pie.
This chart makes it even clearer. Even in what looks like a down quarter, that North America Retail segment is the massive profit engine for the whole company. But look at Pet. It's a strong number 2, which tells you exactly why they're making this big bet.
So the story gets a little more nuanced here. Yeah, getting rid of the yogurt business dinged the retail segment's results, but the pet segment held steady. That kind of shows the logic behind their big strategic gamble, right?
So what does all this mean for the future? Well, the 10Q doesn't just look back. It gives us a pretty clear roadmap of the company's priorities. Right in the report, they lay out their goals. 1, fix the sales decline in their main retail business. 2, push like crazy for growth in that new, bigger pet food division. And 3, find savings somewhere to help pay for it all. So really, it's a strategy of focusing their efforts, navigating a pretty tricky consumer environment, and, making a huge bet on our furry friends.
And all of this leaves us with the big question, right? By swapping yogurt for pet food, is General Mills actually choosing the right recipe for the future? I guess only their next report card will tell.